Just gonna talk a little bit about Forex. Gonna give you some tips and I guess what I'd wanna know when I started trading 5 years ago. So I've got 15 points to go over and 5 top tips which will increase your profits greatly if you take on the advice and understand it. So I'll just start from the top. I've just got bullet points, so I'll just go through them quickly. Firstly, you want to trade bullish or bearish patterns, and you wanna find the highest probability patterns. Then you'll want to look for a place to enter the market. I use Bollinger Bands for volatility, support and resistance. What else? Yeah, I think mainly Bollinger Bands for entry. And yeah, support and resistance, like I said. I don't know what to say about that one. 3. Sometimes on hourly, I would look for pullbacks after a good signal for entry. Usually that works best in a trend. And if it's a range, then usually when you get a like a Bollinger Band support and resistance bounce, usually on a range, immediate entry is best. That's when the market's going sideways but not in a trend. If you're scalping, then I would say use like a 1 minute, 5 minute chart. I'd actually say 1 minute, 5 minute. 1 minute you get better entries on a range. 5 minute might be a bit more consistent with less noise. That's if you're scalping, and depends on your personality. When I started, I was scalping for about a year and a half actually, and then I turned into like a day trader, and now I'd say I'm like a swing trader, but I use the techniques of the day trading and scalping. Next, I would say do your back testing to find the best price for execution and the best time to enter based on the pattern that you trade, and make sure that it's like fixed. So whenever the pattern that you trade shows up, you know exactly at what point to enter. So you're not just randomly entering. You're entering based on your formula that you've made based on your backtesting. Next, we've got high risk to reward. So most traders use like a 3-to-1 risk to reward, or reward to risk, whatever we trade, we want to put it. So they'd risk 1%, and they look to make 3%. Most traders do this. At first, I'd say it's not a bad idea to do this, but after 6 months, once you've like got the basics of Forex, I would say you want to get like a minimum of 5-to-1. So you risk 1%, just for example sake, make it simple. The minimum I would recommend that you aim for is 5% back, and that gives you better odds, in my opinion. You can basically, it just means you can afford to lose more trades but have a better chance like profiting, generally speaking. That's just my advice. But I'm not saying I'm not, just remember, I'm not qualified to give you advice. I'm just this is just my opinion. Next tip, or next point rather, is number 6. Only taking high probability setups. So in the first 6 months of trading, you probably will get like a little bit of this, but because you're in the learning stage, you'll probably be taking a lot of trades, and I don't think there's anything wrong with this. It should increase your learning curve. However, if you've got a mentor and they're telling you to stick to a certain strategy and you trust them, then probably just take that advice. It depends. If you're doing it on your own for the first 6 months, I'd say it's okay to take more trades because you're going to learn faster. But if you've got a mentor and they're telling you something different, then just follow your mentor because you'll learn faster. Number 7. I think I've got these. I think I messed up numbers, but number 7, drawdown management. So this is a bit more advanced. So if you get 5% drawdown, which is like total account loss at once, then my advice is to half your position size. And so if you're risking 1%, for example's sake, and you get a 5% drawdown, then you wanna like risk 0.5% instead. And if you continue losing, so like say now you're at minus 7.5%, then I'd advise you risk half again to like 0.25%, and you just keep doing that until you get back to break even. When you get back to break even, you can go back to your original position size and risk per trade. That's my advice. If you do it the other way around and you increase your risk, it might work at first, but eventually you'll lose, and that's not what you want. You wanna bring your account back to life. You don't want to make it worse. So don't be gambling. That's my advice. Next, you want to have a trading plan, rules, and written strategy. That's gonna happen. That's gonna happen over time. So you'll just write down like what went wrong and have a journal, and you'll write down, this is what I'm trading, this is the time I traded, etc. And this is not, don't do this, do this, and eventually over time it will change, and it will develop. And yeah, I've my first training plan 5 years ago. It was pretty basic. It's probably about 6 or 7 lines long, and now it's completely different, but it's just continually evolved. And yeah, I never stopped learning. But anyway, let's go to the next one. Next is have a mindset of series of trades. So in your mind, basically, when you're trading, you don't want to think about I need to make sure that this is a winning trade. You want to have the mindset that you take your setup. So if it doesn't work out, that's okay, basically, because that's normal. But you want to think like, I'm going to take the next 20 trades and I need to win like 3 out of 20 to be profitable. That's the correct mindset in trading, not to be like risking, like say someone's risking like 3% and they lose 2 times, they're now down 6%, they lose another time and they're now down 9%, and then they risk more to get back what they've lost. That's not the mindset to have. That's like a gambler's mindset, and that's not how you trade. So you have a small risk. Let's say you have 0.5% or 0.2% risk, and then that allows you to make like when you lose trades, that's okay because your risk is low, and as long as you trade with edge, then you'll make money, basically. Yeah, so that's a really important risk management. Next is back testing for your edge is to make sure that you have a positive expectancy in the market. That's quite important. I've heard of traders spending like 6 months straight, like a lot of hours, like full-time hours actually, just back testing, which I would actually agree with. It doesn't have to be that much, but I'm just saying it's definitely advisable that you back test. Back testing for everything, like, so next point is back testing for your stop loss, like optimal stop loss amount and your optimal take profit amount. So that's what I would recommend. It's really important, back testing. Not many people talk about that, but I'd say that's one of the keys to success, and working on like which patterns you're gonna take. Near the end now. Next, set days and times to trade, based on your back test. So you might find some days are more profitable or some days are more risky. If you wanna exclude some based on your back test, you can. My recommendation is, well, I don't want to give, I don't want to say like the wrong advice. So I'm not going to say everything I'm thinking, but I would say have the same time that you trade. So there's a few ways to do it. Some people want to sit in front of the screen 8 hours a day, and that's not the way I would recommend it. So I would backtest, look for the best times of your entries. If you find that it's like, let's just say 5 p.m. in your time for a certain currency pair, say 5 to 7 or something, 5 to 7 p.m., then all you do is every day you look at your pair at that time and you look for your edge. If it doesn't come, you don't trade. If it comes, then you trade. It's pretty simple. That's better because you're spending less time at the chart, you're more focused, and you probably will make a lot more than 90% of traders doing that. There will be some scalpers that might make more, but they're taking bigger risk because they're taking more trades. And if they're taking less risk because they're taking more trades, then they'll probably just earn the same amount as you, but you're spending less at the chart. So what's the point? You might as well just trade less with less risk. Well, more risk than a scalper, but not too much risk basically. If you're scalping, you're probably gonna wanna use less risk, because if you're taking more trades, you're putting more risk on the line. Even though in the scalper's mind, they're gonna think I need to put the higher position because I'm only taking like 10 pips. But my advice is, if you're scalping, don't use a really tiny position risk size. Next is risk per trade, and I talked about it before, but I'm going to say my advice. At first, when I was learning, like at the beginning, I'd say I was risking like 3%, 5%, and it was like I was trading ranges, not trends, and I don't really know what I was doing. I was just like early in, like the first 6 months trading, and it took me a year and a half to realize that this isn't really what I want to do. Like, I want to trade, but not this style. But sometimes sometimes you don't have that knowledge, so you just do what you think is right, and that's what I did at the time. So this per trade, at the start, it depends. So if you want to start with good habits, then I would say risk about 1%. That's if you want to start with good habits. If you want to accelerate your learning curve of like finding an edge in the market, then I'd actually, this is probably the first you'd hear this, but I'd actually say risk more, because, well, obviously not on a real account, on a demo account, so not real money, but on a demo account, I would say risk more, and see when your edge is working, when it's not working. And because if you're learning and your risk is low, when you lose, you're not going to really notice as much. So this is going to sound stupid, but I'm telling you, this is what I would do. So if you're learning on your own and you're risking, say you're risking like 3 to 5%, like what I was doing when I was learning, every time you lose, you notice it, and you can write down what you did wrong or what you thought you did wrong, and that can actually improve your trading faster. The problem with that is, after like 6 months, 1 year, if you're still risking high amounts, then it's difficult for you to get down to the right risk, and that could take years to do, because it took me years to reduce my risk from like 3 to 5% to half of 1%, which is what I'm using now. And I think even half a percent is kind of risky, but it's part of my strategy. If I was risking 1% though, I think I'd be a bit like, okay, I don't want to lose 5 trades in a row, because that's 5%. But with risking half a percent, that's only 2.5%, and I can then take another 5 trades, and I've got a better chance of making a profit, because my risk to reward is above 5 to 1. So technically I'm only supposed to win like maybe 10% of my trades technically, but because I've done back testing and I've been doing this for like 5 years now, like almost consistently most of the time, especially recently. At the beginning I was really consistent, and the last like year I've been really consistent. So yeah, now I'm gonna get to the tips that I've got. Some of these I have mentioned before, but these are like more advanced now. Even though I have mentioned some of these before, these are just top tips now. So for anyone that's been trading for longer than 6 months, this is what I would do or try. Top tips. So only take high probability setups. I've mentioned this before, but yeah, it's important. Trade less and earn more. Yeah, so if your strategy is trading trends, then only trade the trend. Don't trade range. It just makes sense. If you're trading or scalping a range, and that's a strategy, when it breaks out, then it's not. If it's not part of your strategy, then don't trade it. You know. Another tip, actually, I haven't got this one down, but I've just come to mind. Every trader is different, because everyone's got a different personality. So if you have like a trading coach or mentor, they might tell you that you should scalp, or you should day trade or swing trade or whatever. That's not necessarily the best advice, unless you wanna like copy everything they're doing. And you know, if you wanna imitate, like copy everything they're doing, then that's fine. But if you're trying to learn and find your own strategy and your own trading personality and stuff, so I would say, yeah, like the coach or mentor should be like giving you advice based on your personality. We probably already know about that. The next top tip is using the highest risk to reward possible. So as I said before, mine is like at least 5 to 1. With my strategy, the minimum I do is like 9 to 1, to be honest with you. That's minimum. Maximum would be 28 to 1, and that sounds crazy, but that's just the way I like to trade. What else? Risk less than half of 1%. So yeah, I mentioned it before, but again, if you risk less than half of 1%, and you know what you're doing, you've got an edge, etc. You've done your plan, your back testing, you've got a few months experience at least, you've got a better chance of making money, even though it may not be as much as like you want, depending on your account size or whatever. You've got, using the high risk to reward, you got a good chance of making good money anyway. Like if you follow the steps I've given you so far, using half of a percent, and like say you're getting 5 to 1 or 10 to 1, you know, you only need to win like 3 or 4 trades and you can make a massive amount. Like you could make 10%, 20%, 25% a month. And if you find more setups, then you could actually make like 50%, and that's only risking 0.5%, like all the time fixed. Yeah, so that's pretty good. Next top tip, number 4, never stop improving. So as I mentioned before, I've been trading for 5 years and I'm consistently improving all the time. Another thing that comes to mind is managing your emotions. So just, I think you probably heard this before, but I want to say it again. So a lot of traders will say treat it like a business. What else? The last tip is really important. I've mentioned it a bit before again, but I'm going to go over it again a bit more because this is really important if you know what you're doing. Number 5 top tip is backtest for confidence and better entries. So that includes getting the best stop loss amount. So if you find that your entries are having a lot of like the price goes against, when you make an entry, the price goes against you, like it goes against you 12 pips. Yeah, so what you'd want, if that always happens, then you wanna set your stop loss something above 15 or 16 or 17, so that you've got the best chance of profit basically. And obviously, like with your risk reward, if you're doing like a 15 pip stop loss, then I'd say like minimum 100 pips to take profit. Yeah. What else? Better entries. So, yeah, so back testing, you want to look when I mentioned this again. I mean before, but I'm gonna say it again. So when you're back testing and you're looking for entries, make sure that it's fixed. So you know the best time to enter, and it's not when you get a signal to trade. You're not thinking about things like, oh, at what point should I trade or what point should I enter. You know, you want to have all of that sorted. So when you get an entry, you've already got your lot size, your stop loss amount, your take profit amount, and you just enter the trade because that's part of the strategy. That's all my tips. Let me see if there's anything else. I've got some notes. So yeah, in my plan, I've got a fixed, like I've got like I'll either use the 15-minute chart or the hourly chart or the daily chart, for example. So sometimes you could use one chart for entry and another for analysis or whatever. But the way I do it, I keep it really simple now. I just use one for everything, which sounds crazy, but I just keep it really simple. I've looked at everything, like I've looked at trying to do multi chart analysis, and that doesn't work for me, so I just keep it really simple. What else? And then restrict your trades per day. So if you have 3 a day or something, if that's part of your plan, always stick to it. That's what I would actually recommend, like 3 maximum actually. And if you're doing 3 trades maximum a day, and your maximum risk per day is 0.5%, you wanna divide that 0.5% by 3, which might be about 1.25 or something like that. So what else? Another tip actually is, after say you're trading a 30-minute chart. This is just advice I would give. Doesn't mean you have to take it, because it might not work in your strategy, but my strategy works. So if you're trading on a 30-minute chart, after the entry for 30 minutes, which is just one candlestick, you can move your stop loss to break even if you want, just in case it comes back, and that basically prevents you from using the 0.5%. And it doesn't seem like a lot, but it adds up. If you had 10 losing trades that you could have made break even, and you've saved yourself 10%, look at it that way. Not everyone wants to do that, but that's just my advice, just because it works with my strategy. I would say stick to one or two pairs, like currency pairs, if you're doing Forex. And that's because you want to, I know this is going to sound stupid again, but you want to just get used to how like the volatility in the times and stuff like that. Yeah, be disciplined in your entries. Like when you've got an edge, just be disciplined. Like don't trade anything else other than what your plan is. This won't happen immediately. Like if you're new to trading, it's not gonna happen immediately. But after 6 months, 12 months, you're gonna wanna just take the higher probability setups. What else is there? Yeah, and with in regards to your plan, just have like a list, like for example, the way I do it is, I'd say my trade plan, after I've got all my risk, like my rules and my signal for entry and everything written down on my plan, I've got a part where it says projections, and I'd have like 1 out of 20 wins, 2 out of 20 wins, 3 out of 20 wins, for example, and it would tell me percentage how much I'd make or lose, and so percentage gain or loss based on the amount of wins out of 20, and it would tell me the profit that I'd make. So I'm always aware of the plan. And yeah, then that's it. I don't think there's anything else. If you're new as well, it could take you 2, 3 or 5 years to learn, but if you get a coach or a mentor, then you speed that up. So I hope this has been helpful. I'm on Instagram, it's ITM Pro. Yeah, so it'll be in my description if you want to follow me or ask. But you can ask me questions on YouTube, actually, to be fair. Yeah, you can ask me questions on YouTube. But if you want to ask me personal questions, then you can do that as well on Instagram. It's fine. And I just hope that this helps someone, because when I started trading 5 years ago, 2016, the first thing I did was look on YouTube, and I found a strategy. Like, someone showed me the Bollinger Bands and when to buy, when to sell, and I found that really helpful. So the strategy is basically, when the price goes above the Bollinger Band and then comes back into the Bollinger Band, that's a sell. And then when the Bollinger Band when the price goes below the bottom Bollinger Band and then comes back up above the Bollinger Band, that's a buy. That was the strategy I was using for ranges, scalping, and I was literally in and out of the market within 30 seconds to 2 minutes, literally. That was my strategy. If you want to start like that, you can, but you're going to be changing the strategy over time and stuff. So if you need advice or whatever, then feel free to message me. If I've got the time to do that, then I'll help as much as I can. But yeah, hopefully this helps. This helps a few people. I hope it was beneficial to a few people at least. So yeah, all the best if you're trading, and I might be making another video at some point, maybe. Alright, all the best.